It started, Shanghai vaults drained and the global run on silver. While you were sleeping, while the talking heads on financial television were debating earnings reports and meaningless jobs data, a tectonic shift occurred in the global monetary system. In Shanghai, where they trade real metal for real currency, physical silver closed at over $53 per ounce. At the same time, the vaults of the Shanghai Futures Exchange and the Shanghai Gold Exchange are being systematically drained, hitting new lows day after day. China has reportedly pulled the trigger, effectively telling the world, no more deliveries. We are keeping our metal, this is not a drill. This is a structural failure of the global supply chain unfolding in real time. The great unraveling has begun. What you're witnessing is not merely a commodity having a good week. It is the death rattle of a dying system. For over 50 years, the world has operated on a grand illusion, a fiat monetary system backed by nothing more than debt and the waning credibility of central bankers. The United States national debt is now an incomprehensible figure, rocketing past $38 trillion, with annual deficits projected to add nearly $2 trillion each year for the foreseeable future. This isn't a problem for your grandchildren anymore. It is a clear and present danger to your wealth, your savings, and your family's future right now. The old rules of investing are not just broken, they have been incinerated. The architects of this system, the Federal Reserve, are now hopelessly cornered. They are trapped in a prison of their own creation, a scenario we have warned about for years: stagflation. The economy is slowing, threatening a deep recession, yet inflation remains stubbornly high, eroding the purchasing power of every dollar you hold. To fight the recession, they must lower interest rates and print more money, which only fuels the inflationary fire. To fight inflation, they must raise interest rates, which will bankrupt the nation and crash the economy. There is no escape. There is no soft landing. There is only the printing press, their solution to every crisis, which is nothing more than a hidden tax on your savings and a slow-motion default on their obligations. This is the macro problem in its starkest terms, a sovereign debt crisis meeting a currency crisis. The policies enacted in Washington have created a doom loop of spending, borrowing, and printing that has reached its mathematical limit. The rest of the world sees it, even if the average American is being deliberately kept in the dark. Nations are running, not walking, away from the US dollar as a reserve asset. The weaponization of the dollar and the SWIFT system was a fatal miscalculation. It forced countries to seek an alternative, to find a neutral reserve asset that cannot be printed into oblivion or sanctioned at will. And they have found it in the oldest and most trusted forms of money known to man: gold and silver. This de-dollarization is no longer a fringe theory. It is stated policy for the BRICS nations and a growing coalition of countries representing the majority of the world's population and commodity production. We are witnessing the birth of a new monetary order, one based not on paper promises from Washington, but on hard assets. Central banks have been accumulating gold at a historic pace for years, a move away from U.S. treasuries. This was the first shot across the bow. But now a second, perhaps even more consequential, front has opened in this financial war. They are coming for the silver. For decades, silver has been dismissed as poor man's gold, an industrial metal subject to the whims of the economy. This narrative was always a deliberate deception. Silver has been money for 5,000 years, and it is about to be remonetized on a scale that will shock the world. We are receiving credible reports from well-connected sources in Asia that central banks have begun to buy physical silver in massive quantities. This is a paradigm shift. With accessible gold supplies dwindling and prices soaring, these sovereign players are turning to the next logical and massively undervalued monetary asset. The most significant catalyst in this story is coming from the nation that understands precious metals better than any other: India. Beginning in April 2026, the Reserve Bank of India will officially recognize silver as collateral for bank loans, a monumental step towards its full remonetization. For a population of 1.4 billion people who have a deep cultural affinity for silver, this policy unleashes centuries of stored wealth, allowing it to be used as productive capital. It is a declaration that silver is, once again, real money in the banking system of a global economic power. Think about the implications. India's policy effectively establishes a new monetary role for silver alongside gold. Some reports have even suggested the policy could establish a collateral lending ratio of 10-to-1 between silver and gold, a stunning move that would completely upend the current market dynamics, where the ratio hovers closer to 80-to-1. This isn't just a regulatory change, it's a message to the world. As the West drowns in fiat debt, the East is building a new foundation on sound money, and they are encouraging their citizens to do the same. This is financial sovereignty on a national scale. This Eastern remonetization is a direct threat to the paper price discovery mechanism of the West, centered in London and New York. The COMEX and the LBMA have controlled the price of silver for decades through a fraudulent game of paper derivatives. They trade hundreds of millions, sometimes billions, of paper ounces of silver in a single day, a volume that can exceed the entire annual global mine production. It is a Ponzi scheme designed to create artificial supply and suppress the price, scaring Western investors away from real assets and keeping them trapped in the fiat system. But this game is coming to an end. The physical demand from the East, from central banks, from industry, and from savvy investors is now calling their bluff. The LBMA, for instance, has reportedly seen its silver reserves fall to historic lows, even while daily trading volumes in paper contracts dwarf the physical metal they actually hold. This is the definition of an insolvent system. They have sold claims on silver that they do not possess, and the day of reckoning, when they will be forced to either deliver the metal or default on their obligations, is fast approaching. Nowhere is this physical squeeze more apparent than in China. The draining of the Shanghai exchange vaults is the canary in the coal mine for the entire silver market. Unlike the COMEX, the SHFE is a physical market where contracts are backed by actual metal. The fact that these inventories are evaporating, and that reports indicate China is halting exports, means the world's largest consumer of the metal is cornering the physical market. They are absorbing all available supply, knowing a global shortage is imminent. They are preparing for the day the Western paper markets inevitably break. The Chinese are not speculating, they are accumulating. They understand what the West has forgotten, that physical possession is the only thing that matters. While Wall Street creates complex derivatives and ETFs, the East is taking delivery of the actual metal. This divergence between the paper price in New York and the physical price in Shanghai is the chasm that will eventually swallow the manipulators. The price discovery is shifting from West to East, from a system of paper leverage to one of physical reality. This brings us to the tipping point. We are approaching a moment of critical failure in the silver market, driven by a perfect storm of factors. On the one hand, you have the fraudulent paper scheme of the COMEX, a system leveraged hundreds to one, with paper claims massively exceeding physical inventory. This suppression scheme has worked for years, but it has created a coiled spring of immense potential energy. Every short position held by the bullion banks is a promise to deliver physical silver that, in aggregate, does not exist. On the other hand, you have an explosion in real-world physical demand that can no longer be contained. We've discussed the monetary demand from central banks and the citizens of India and China. But layered on top of that is an industrial demand revolution. Silver is not just money. It is a critical strategic metal essential for the technologies of the 21st century. Solar panels, electric vehicles, 5G networks, and artificial intelligence infrastructure are all voracious consumers of silver. Industrial demand is set to grow exponentially for decades to come. This inelastic and growing demand is colliding with a critically constrained supply. For nearly a decade, the output from silver mines has been in decline. Years of suppressed prices have destroyed the incentive for exploration and the development of new mines. You cannot simply flip a switch and produce more silver. Even at triple-digit prices, it would take 7 to 10 years to bring a new major mine online. The supply pipeline is broken and there is no quick fix. The world is facing a deep, structural, and permanent silver deficit. For 5 consecutive years, the world has consumed more silver than has been mined and recycled. This deficit has been filled by draining above-ground stockpiles. But those stockpiles, as we see in the Shanghai and London vaults, are now nearing exhaustion. When there is no more stockpiled silver to fill the gap, the market will break. A bidding war will erupt for the limited annual supply, and the price suppression of the paper markets will be rendered irrelevant. This is the tipping point we are rapidly approaching, a global physical shortage. So what does the impact of this look like? When this tipping point is reached, the repricing of silver will not be gradual. It will be violent and sudden. The paper price on the COMEX will become a meaningless relic. The true price will be determined by those who hold the physical metal. A failure to deliver on a major exchange, a default, will be the Lehman Brothers moment for the precious metals market, triggering a complete loss of confidence in the entire paper derivative complex. In the short term, expect unprecedented volatility. The bullion banks caught in their massive short positions will fight tooth and nail to contain the price, leading to dramatic intraday swings. Do not be shaken out. This is the death throes of a dying beast. The long-term trajectory is undeniable. The price of silver will have to rise to a level that either destroys industrial demand or incentivizes the discovery of vast new supplies, neither of which will happen at $50 or even $100 an ounce. The impact on the US dollar will be devastating. The explosive repricing of gold and silver will be a global vote of no confidence in all fiat currencies, but especially the world's reserve currency. It will expose the dollar not as a safe haven, but as an unsecured liability of a bankrupt government. As the true value of sound money is revealed, a mass psychological shift will occur. Capital will flee from paper assets, stocks, bonds, and cash, and desperately seek the sanctuary of hard assets. We are looking at a future where silver's value is not measured in tens of dollars, but in hundreds. This is not hyperbole. It is the logical outcome of decades of price suppression meeting a fundamental supply and demand reality. The historic monetary gold-to-silver ratio of roughly 15:1 is not an accident of history. It reflects their relative abundance in the Earth's crust. A return to that mean is not just possible. It is probable as the world seeks monetary stability. This event will trigger a wealth transfer of historic proportions. Wealth will be transferred from those who hold paper promises to those who hold physical metal. It will be transferred from those who trusted the pronouncements of central bankers to those who trusted the lessons of 5,000 years of history. And it will be transferred from the unprepared masses to the prudent few who had the foresight to prepare. The question you must ask yourself is, on which side of that transfer do you want to be? Think about the psychology of the average person, the 98% who are currently asleep, who believe the number in their bank account represents real wealth. They are oblivious to the rot in the monetary foundation. Their awakening will come when they go to the grocery store and a loaf of bread costs $12, when gasoline is $15 a gallon, not because of a supply shortage, but because the dollar in their pocket has lost its value. When that mass awakening occurs, it will trigger a panic. But this will not be a panic like the dot-com bust or the 2008 financial crisis, where people fled to the perceived safety of the dollar. This will be a panic out of the dollar itself. People will frantically try to convert their melting currency into anything of tangible value. They will rush to buy physical gold and silver, but by then it will be far too late. In today's digital age, this panic will unfold with breathtaking speed. Unlike in the 1970s, where you had to physically wait in line at a coin shop, today people can wipe out the entire inventory of online bullion dealers in a matter of hours with a few clicks. We saw a preview of this during the early days of the pandemic in 2020. Premiums skyrocketed, delivery times stretched to months, and many dealers simply stopped taking orders. The coming panic will be an order of magnitude greater. The coin shops will be emptied. The online dealers will post "sold out" signs across their websites. The window of opportunity to acquire physical metal at anything resembling a reasonable price will slam shut. Those who waited, those who dismissed the warnings as conspiracy theories, will be left holding worthless paper. This is the harsh reality of a currency collapse. It is a sudden and brutal event for which there is no remedy after the fact. This is not about getting rich quick. This is about survival. It's about preserving the wealth you have worked your entire life to accumulate. It is about building a financial fortress for your family that can withstand the storm that is no longer on the horizon, but is now upon us. Financial sovereignty begins with understanding what money truly is, and it is secured by taking physical possession of it, outside of the corrupt and insolvent banking system. Every piece of data, every central bank action, and every geopolitical development is screaming the same message. The endgame for the fiat dollar standard is here. The battle between paper promises and physical reality has been joined, and the outcome is not in doubt. Physical metal will win. The laws of supply and demand are absolute. The hubris of central bankers who believed they could print their way to prosperity is about to meet its inevitable and catastrophic end. Do not be swayed by the manufactured volatility or the propaganda from the mainstream financial media, whose job it is to keep you docile and invested in the system. Look at what the smartest players in the world, the central banks of the East, are doing. They are not listening to what Western officials are saying. They are watching what they are doing, and they are preparing accordingly by stacking physical gold and now physical silver. Your window to act is closing. The opportunity to exchange infinitely printable paper currency for a finite, real, and historically proven monetary asset is a fleeting gift of this transitional period. Every ounce of physical silver or gold you acquire is a vote against a failed system. It is a personal declaration of independence from the tyranny of central banking and irresponsible government. It is your personal insurance policy against the great unraveling. In closing, I urge you to think critically. Look at the national debts. Look at the structural deficits in the silver market. Look at the actions of nations like China and India. Connect the dots. The narrative they are selling you is one of control and stability. The reality is one of chaos and collapse. Prepare yourselves accordingly. Take control of your financial destiny, because no one in Washington or on Wall Street is going to do it for you. The time for deliberation is over. The time for action is now.